Hello, hello. Good morning, everybody. How you guys doing? All right, all right. So let's cut to the point. As you guys know me, my name is Mark, and I'm going to be your mentor for the upcoming 1 hour, I can say, the upcoming hour. So as you can see right now on the screen, this is the link that we've been talking about. You can see I'm a member of it. I try to register to it before I can even suggest somebody to register to it. So this is Infinite Prosperity. I'll be using that link and that website, I can say the resource, in order to help you and tell you how great that resource is. So you will just like see by yourself a little thank you right now. We'll go with the first two lessons that are definitely free. And I'll give you a little bonus with the third lesson, which is on the risk management. So when we going, you can see my name over here. So we go now. The first lesson, it's about what is trading. And I'm definitely sure you guys should know exactly what is trading. Yeah. Trading is about selling and buying. Just that. Simple as it is. You're selling and buying. I'm talking about forex trading in, of course, selling and buying a currency. So we're talking about two pairs. You got the dollar, which is basically the universal currency that we've been using for quite a while. Before was linked to the gold, but after the Brent will hold agreements, everything just like kind of been separated, and now we have the dollar, which is a single entity, and the gold, which is another commodity, and we can call it an entity as well. So over here, if you've been reading, of course, the free listen, and I'm definitely sure, and I hope that you guys been reading the free listen because you need to read it. It's free. There's no cost added on it, so you need to enjoy that thing. So you have now what we call about you have the base currency and the code currencies. So you'll be just selling one currency and buying another one at the same time. So that's why trading is pretty nice and very, very lucrative. I can say the volatility over there, it's amazing. We got more than 1 trillion. We got like 4 trillion or 5 trillion nowadays. About the volume about trading, the amount is ridiculous. Totally. So let's get this is the story about the guys. You don't really need to bother about that, but if you just like feel free and you just enjoy it, you can go there, try to have a look. It's free and enjoy it. So what is an exchange foreign? What is a foreign exchange? It's like we take the simple example of having you want to buy something in Australia. I would say a little like this example says a watch, or we can say probably a car, and that car will cost you, I would say, just an example, will cost you $1,000, 1,000 Australian dollars, and you have that car for now about, I would say, two years, and you decided to sell it. But that same car costs $1,200, and you realize that even with the 2 years of usage, that car now costs 900, or in Australia it costs 700, I would say, something like that. So if you're able to just like kind of trade that car in dollar, you'll be able to make a profit of 200. So foreign exchange is about exchanging the different currencies. Like when you go on the counter, you travel. All of us have been trading before, but we're not aware of that. You go probably in another country abroad. I would say you probably have to exchange your currency into euro, pound, or dollars, or South African currency. I have no idea. You realize that you'll be going to the foreign exchange office, get your money, and trying to convert it. Now, at that time, when you do that, the foreign exchange office will get a commission on it, which you will not be able to touch it because those guys are able to trade straight with the market. So that little commission is theirs, and you will get now the exchange that you were requesting, but that will be only for the value of your of the amount that you just like kind of giving to them. So you have now trading, which is about having a market, a broker, and an individual, or it can be a bank or any other stuff. So you try to buy to the market, all right, and you're using a broker to be the intermediary, I can say the link between you and the market. Some people can go straight there and buy to the market and buy some contract. Yeah, you can do that. But as an individual, as a beginner, I'm definitely sure you're going to only buy the way it is. Just going through the through the broker, place your orders, and now have everything set up. So now we're talking about how to make money in trading. And to be honest, people need to stop asking that question. How to make money in trading. Forget about that. Start learning about what is trading, the currencies, the major currencies. Like we're talking about USD, Euro, the Sterling, which is the GDP, the GPY, you got Shift, which is normally Switzerland pair, you got the CAD, which is the Canadian, people Kiwi, as you want, your Australian dollar, and you got also the New Zealand dollar. These are normally the 6 major pairs that you need to just be aware of. You can also have what we call the exotic pairs, but I won't really suggest you to trade the exotic pairs because of slippage over there. It's quite huge and the volatility is not that much, so it's up to you. But what I can tell you, everything which is related to the major pairs, so that means you can trade against just like the USD against the euro dollar. You can take the sterling, what we call normally cable, the sterling dollar against the USD. So those are the type of pairs that I would really suggest you to do. So now when we talk about a pair, you can see that we have the Aussie. So the Aussie dollar is normally AUD. AUD, you have the first 2 letters, which means the Australian, and now the last letter, which is basically the name of the beginning, the name of the currency. So you got the Australian dollar, you got the US dollar. Okay, you have some exceptions like Europe and the euro and everything like that, because Europe is quite a big group of countries together. So now talking about the trade with Forex market, why do you have to trade a Forex market? It's a pretty amazing question people keep on talking about. The Forex market is 24/7 open. So you have less slippage. When I talk about less, doesn't mean that it doesn't happen, because if you just close the market on a weekend and you come back the next day and the next week on Monday, you may have a slippage. It happens a few times, yeah, from time to time. But if you take a stock market, every single night they have to close it. So that's not really what I suggest people, and there's less manipulation in the forex markets compared to the stock markets as well. So you can see that and realize exactly what you want to do. The volatility over there, it's quite huge, amazing, and the leverage is 10 times bigger than the stock market and other markets like options, futures, and everything. You got 4 or 5 trillion dollars, which are being released every day by all type of institutions just to make the money flow. Man, people are trading that every day. And you know, the funny part is you do not really go against any currency, because you have the base and you have the quote currency. At the same time, you just like kind of shorting the quote currency, you buying the base. Or you buying the base currency, you're shorting the quote. So you're fine. Really. There's no need of manipulation over there. You need to be aware of the news, which are the things that will come along with it. We just like talk about it. So as I told you, the 24 hours market, no one really control the market, the price, I can say. The low cost in the industry, with the advantage of having a leverage, we talk about that as well. Depending about the country where you based, you have a certain type of leverage for forex, 1 to 100, just like 1 to 500. Even today I saw 1,000. Just like I'm like surprising, and there's high liquidity over there. When I'm talking about high liquidity, is like kind of is it a lot of money over there? That's the 4 trillion, the 4 or 5 trillions that I'm talking about. So you can just really see that as a big picture. There's no need about rushing to make a trade or to make money or to have money in trading, because trading been there for ages. I'm like, we weren't even born. So take it easy. It's pretty simple. Just you miss a trade, you miss a trade. A trade doesn't respect your plan, doesn't respect your plan. Let it fly, let it go. There's no need to chase him. You chase him, you're just chasing a cutting, just a falling knife, and a falling knife is gonna always cut you. Except if you're Superman. I don't think you are, like me. All human. Okay, the measurement about we have a measurement in trading. We call that the pips. Basically, the pips is the percentage in points. We're using it to know exactly if the trade, if the currency, the value of the currency went up or down. So we take for example, when we say Aussie dollar rises from 1.0520 to 1.0525. So basically, the Aussie just rise from five. There's a 5 pip raising over there. So the Aussie rose from 5 pip. So everybody is like, okay, the Aussie is going up. And when the Aussie is going up, we call that buying. If the Aussie is going down, we call that shorting. Depending about what you just kind of want to say it, I would say that that's not really how we call it, but we say it goes up or down. But if you want to buy the market, we say you're buying. If you want to sell the market, we say we short the market. So talking about the leverage, as I told you guys, leverage is pretty funny thing. But if you have a good risk management, really leverage doesn't mean anything, to be honest. And you better have a good risk management. Otherwise, you're gonna be a gambler and you're gonna be broke the next 24 hours. That's definitely true. There's no need to think about luck in trading. Luck ain't gonna save you. Luck is gonna make you happy for the first 2 hours or probably for your first trade and miserable the remaining time of your career. So we talk about leverage right now. We have different type of we have different type of loads. We have what we call the standard loads. We have what we call the mini loads. So and the micro loads. When we talk about the standard loads, we talk about 100K, so $100,000 worth base. And when we talk about the mini loads, we talk about $10,000 worth base. And the micro loads, we talk about $1,000 worth base. So you know a bit like what I'm talking about worth base. If you have no idea, I will just give you a simple example. We got a 2 mini loads right now. We're about to take a trade with it. So we're going to make money, guys. It's happening. The value of those 2 mini loads is 20,000. All right. I know you don't have 20,000 right now, but don't worry. Traders are gonna help you to make that trade. So your margin, the margin required to make that trade, you need to have 20,000. All right. Okay. Which is pretty big, man. Shit. Hot. You don't have it. Even me, I don't. Now we say that we can buy it at 1.500 or sell it at. We buy it at 1.500 and we sell it at 1.600. All right. So which is equal to 100 pip profits. This 100 pip profits, if you just like take the leverage into consideration, is a $200. Of course, because we have a risk, we have a we have a risk, a profit loss. I say a profit loss. We have a risk of one person. Sorry, guys. You have a risk of one person, so you just take this one into consideration when you just take any trade. Always go with the one person, and I would just kind of make it easy for you along the way. You will understand exactly what we're talking about. Now I'm just trying to give you the global and general idea about what is trading and what exactly trading does. So right now we just being okay, we bought the whole thing, we just had a successful trade, we're successful traders, people are talking to us, trying to see exactly what we're doing, and they love what we're doing, and we're about to buy a new car. Okay, don't do that. So that same thing, if that was a standard lot, you will see that your profit will be a 2,000. So what did the broker do? That was really simple. Normally the market, in order to allow you to have that trade of 20,000, you needed to have those 20,000. It needed to be on your trading account, but you didn't have that money. So there were a leverage. I would say that we had a leverage of 1 to 100. If you divide right now those 20,000 with just 0.1, no, 0.01 and 0.000, you will see that you will get into 200. So what you really needed to make that trade, you needed to have at least a 200 in your bank account, just because of the benefit of having a leverage. As you can see over here, leverage helps to amplify your money. That's been the value that the market can accept. So it's like you just taking a loan with the bank. You're taking a loan with the broker and placing that trade. But you have to know that at the end of a trade, that money needs to be back. And that's something that people don't realize. They think that we take a loan and that's it. It's over. We don't need to do anything else after. And that's sad. So now the good thing about trading the Forex market is like you can short the market. You can short it. It's so funny. Just like you short the market because you're not really shorting the market. You're shorting a currency and you realize that you're buying another one at the same time that you're shorting this one. So it's fine. It's not like if you have a stock, like I would take the example of what happened last year when Deutsche Bank just went and dropped of 30%. After that, they had to close everything. They closed their stocks market. And that's, they could control that little part. It's like something happened, they can just like say, okay, we don't want to just endorse that much pain. We better close it in order to save our shares and everything like that. So everything can be manipulated over there. But when we talk about what happened in 2008, the big crash, man, I can tell you, currencies were open. So if you had good money over there, you'll be shorting that money, man. I can tell you, you'll be probably a billionaire right now. I'm joking. Just depending about how much you have in your bank account. But you will definitely have some good cash, good profit. And that would have been a good sum. But that's the thing that we really like about trading. It's like you can short the market, you can buy the market, you can do whatever you want to do, and you just have the good pairs which are flowing with you. We have the training pairs. We have also some of the pairs we love consolidating. That I will just tell you exactly what it is later on. But you got all these things. So what I told you, if you can see on this diagram, you have now what we call the long trade and you have a short trade. A short trade is when you sell it. So that means we sell high to buy low. And for a long trade, we buy low to sell high. That's so simple. Because if you just want to buy something, do you want to buy it high, first of all? I'm like, right now I'm telling you that I have one Jordan pair of, just like I would say, I have a phone, a high phone on my hand. And that iPhone are just like, it's not again the sales. And I'm selling that iPhone at 600. And the sales will be probably in the next 2 weeks, and that iPhone will be now like 300. What will you do? Will you just jump on the 600 because you're in desperate need of a iPhone right now? I don't think so. You wait. You wait for the sale to come in, have the discount, so you buy it low. So in case that you want to sell back that iPhone later on in the next 2 years or next year, and you're trying to have some profit because you bought it at just 300, and on the market we said after 2 years the iPhone is sold at 400. So after 2 years you're making a profit of 100. It's all about maths and all about everything that we do in life. There's a common sense inside. Trading has the same common sense. As long as you respect the rules and you definitely follow everything which is given, you're gonna be fine in trading. There's no big things. It's like discipline, consistency, and a good trading plan. You have those three, you're fine. But these things are simple. People don't like to respect them because they're all chasing money, which doesn't make sense. So let's come to the different type of market news that you can have. The different type of ways of trading. You can be a fundamental trader, or probably a technical trader, or a hybrid, which is a combination of both. But let's take as a fundamental trader. A fundamental trader will always be looking for the news and do everything based on the news. Any trade. I'll definitely be a fundamental trader if I have to, just like if I'm doing some investment, just like big investment, and I know that the euro is down, I'll be shorting the euro. See if I was there since 2008 or I don't know what. Yeah, but if you want to be a swing trader and day trader and all these kind of traders, the news matters a lot, but you don't need to just kind of rely on them 100%, because sometimes you will see that the news and the technicals do not align, and that's the funny part, because the technical is showing you something with a pattern and it's definitely following that pattern, and the fundamental is saying no something else, and you don't understand. But I'm like, I like to say that I'm a hybrid, but more technical. I love taking technical trades. Technical is everything that I just kind of enjoy the most every single time. So you can read everything about it. As I told you guys, I'm trying to not going too much in depth with the definitions, because I want you to just do your little homework, research, and just come back with the questions and just start asking me what you want to understand and what you don't want to understand. Okay, if you don't want to understand, don't ask me. Simple. All right, let's take a little example. Like we already talked about, what is the profit? What do we talk about profit really in all these things? It's like you have a company and it's an asset for you. You need to buy different things inside, so shares, wages, electricity bill, all this kind of stuff, and also the goods that you want to just provide to the public. You have all these things, you put it in your cash flow. It is there in your cash book. You have it. Now, the product that you're selling, you're trying to sell it at the end of the month or at the end of a year. You're trying to see exactly how much you have per annum. I would say that. So we take everything, that all your expenses, you just put it in one side. All right, you have all your expenses over there, and then you have everything that you sold during that year. If you just like can make the subtraction of those two, you will see exactly how much you got at the end, which is going to be your net profit. This is what makes a business either successful or not successful. If you're able to have a profit, a positive profit, you're a successful business. If you have a negative one, you know where it goes. So that's the same about trading. You're gonna have some losing trades. People hope to have 100% way to success. It doesn't work even in trading. It's not possible. Even when you go to the gym, you need to have a bit of pain. I'm like, you go to the gym, you don't have any pain. That means you're not going to the gym, bro. You need to stay at home, chill, sleep, eat, do something else. Don't waste your time going to the gym. You go to the gym to have something, to have a result. Because if you go to the gym for 1, 2 years and there's no result, basically I can tell you what you're doing. You're wasting your money. Give it to me, I can do something better with it. That's to be honest. But if you just like kind of have some losing trades, and your winning trades are bigger than your losing trades, you got that profit, which is positive. Now, how do you know that you will still have bigger just winning trades? That's all based on your strategy. Has it been back tested? What's your hit rate? Is it like 70% of the time you're just winning and 30% of the time you're losing, or 50% of the time you're just losing and the other half you're also losing, or you're totally losing at all? You're trying to be a gambler and trying to chase the money. You have all these things which you just like you have to take into consideration. So, are we talking about the price chart? All right, you will see on different platforms, you will have various type of price actions. I can say there'll be the candlestick, the bar chart. You will have also just like the line chart. You will have a lot. Okay. Nowadays, people they're more accustomed to the candlestick pattern, because it's the candlestick chart, because it's quite simple and easy to use. Really, you can just be a professional and just go also for a bar chart. I just do both sometimes, but I'm more into a candlestick pattern, right? Candlestick chart, man. So on the screen, you can see that this is the bar chart over here, and that's a daily bar chart. And the daily bar chart basically means you see all those bars, all those different bars over there on the screen. It's like each bar represents a day. So it means a lot. There's a 24 hours inside. each bar has a 24 hours. You can see that trading has different pattern, different time frames. You can trade on the 1 minute, which I would say that you're definitely good. You can trade on the 5 minutes. You can trade on the 15. You can take on 1 hour. You can take on the 2, on the 3, on the 4, on a day, on a week, on a month. Okay, if you take a trade on a month, man, I hope you have at least 2 million in your bank account to take that trade because you're really patient. I'm like, I can tell you, I love patience, and I can say, if you're a trader, you need to be patient. But that is being really, really patient. So you have here now the candlestick, and the candlestick has a different form compared to the bar, compared to the bar chart. You see on the bar chart, you have the daily high, the close, and then you got the open and the daily low. You see that that's for a long bar chart. That means that's a buy bar chart. If you have a sell bar chart, that will be just the way around. That's going to be now the open, which will be on the top, and the close down. But of course, you'll have your daily low and daily high, just like which will be inverted as well. Now, when we talk about the and of course, when you have a buy bar chart, it's green, and a sell is red. Now, this is the conventional mode. You can change it. You can go on any platform. You can go on FXCM or any other platform if you wish to change it because you don't like green and red. You prefer black and white or blue and yellow and anything. You can do as you want. But you need to keep in mind that a sell will always open at the top and close at the bottom. And a buy will always open at the bottom and close at the top. Always. Same like the daily, same like the candlestick bar. Except that you see between the close and the open, on the bar chart is just a little bar which is there. But on the candlestick, it's a plain body. It's like, can change the form, depending about the pattern. You can have a doji pattern, you can have a normal, marine bozu pattern, you can have bullish engulfing, anything that you want to just like I'll talk about regarding pattern. That we'll see later. Don't worry, don't stress yourself with those kind of stuff. I got time for you guys to think about it. Alright, so now we have those two. Let's talk a little bit about, now that we saw what is the pips, you know exactly what is the pips, the measurement. You know exactly what is trading is about selling and buying in currency. You know why we trade Forex, because there is a high volatility, there's 24 hours market, liquidity is amazing, you know that there's less manipulation, you got all these things. So exactly how do we manage? It's quite little for some people. They will say, but that's so little to know about trading. I say, yeah, sometimes just go with the basics before you're trying to just like understand what is harmonic, like you're gonna see. I just hear some questions about people asking me, well, what's the harmonic pattern? I'm like, before, do you know what is a flag pattern? And they all say, no, I don't know. Which are the normal basics before you just start going to the harmonic patterns and that pattern and you get lost and you're trying to just say, okay, I'm gonna copy some signals and that's it. That's what happens to some people. So try to understand exactly where you're going, what do you want, and what you're doing. So now we're talking about a little bit about risk management. Risk management is a core, guys. I just please can tell you, it's the core of your trading. That with a little mixture, not a little, with a huge mixture of your psychological part. If you're not able to just understand those two, do not trade. It's going to be a pain. I'm telling you guys, I have to be honest with you. People keep on just talking about the money, but not talking about how to preserve the money that they already have. They want more money, but they don't care about what they already have. It's like I would just like go with a simple example. It's like being grateful about what you have instead of just like kind of chasing something you don't have yet. Be grateful about what you have. So learn, a good investor is the one who just like know how to, he just like thinks about how to keep my money, how to preserve my money, not how only to make money. Because if you don't preserve that money, you will not have enough money to make money. That you have to keep it in mind. So We go on to risk management. We're going to talk about risk management and a different trading strategy that you're going to see into that course. I will not be able to go through them in depth because I do have to respect the laws. I'm sorry. But if you want to know more about it, you just kind of buy the package. And anyway, you just know exactly what is inside. It's not a simple thing. I'm teaching you guys with that. You saw my product. You saw exactly the results I'm making. It's not like I'm going to just tell you, okay, I'm making something that I'm not. No, you saw it. You saw the trade. Some of you saw the trade live. And I'm like, you need to have a resource with you in order to help you to grow. You don't have that resource, you're not going anywhere. I will not always be close to you to tell you what to do. The good thing about trading, the good and the bad thing about trading, you don't have any referee. You don't have any referee. So when you just kind of do something, you need to be able to understand exactly what you're doing. So now let's talk a little bit about what we're doing over here. You can be different type of traders. You can be a day trader, all right? You can be a swing trader. Now the difference between those two is like the day trader will definitely have more trade than the swing trader. To be honest, more opportunities, of course, because it's going with the intraday time frame. Sorry for that. And the day trader will have only to look at the daily time frame. So it will just have the opportunity to take a trade a day. I can say you just can do your analysis at 10 p.m. GMT when the candle open, and then come the next day at 10 p.m. to just monitor your thing. For some people is what they like. It's definitely fine. You have time to enjoy your day, do whatever you want. Because some of the people, when you ask them exactly what you want, they talk about freedom and stuff like that. So you got it. It's that. Now, if you're more into the guy who want like to have the price actions day and night, you want to be inside, then you become a day trader. You just can't do a lot of trades. But doesn't mean that because you have a lot of trades, you're going to have a lot more money. Because over trading can kill your trading account. You try over trading every single time, you will kill that trading account, to be honest. As you can see over here, look at that's what we call about compound accounts with trading. Trading is not about I trade, I make money, and I spend my money. That's what everybody wants. That's what everybody wish for. You make money, you spend it. Then the next day you come and just try to make another trade. You don't have enough money to just get to the same level that you were before. So you're trying to overtrade, or you're trying to not respect your strategy and your plan in order to recover what you lost. And then you realize that you're basically losing everything. You need to be able, that's not about trading, that's about finance, that's about financial knowledge. If you want to be able to just keep on growing with any type of account that you have, just think about your liability should be only 5% of your annual percentage. 5% of your annual account, sorry. It's like I would say that the guy would just have 100K trading account. When he takes this 5%, you just see that it's not that big. It's not that big, but if that can make you feel good, the time you just grow that 100K into a 200, into a 400, into a 500, just take your time. Stick to the plan. Go slow. Alright, people want to spend it so fast. Trading is only here to multiply money for you. Trading will not give you money if you don't have money. Trading will not give you what you just made yesterday if you don't have the same amount that you made yesterday. That's so simple. So in 2010, you can see the guy over there just grew his account by quite a lot, 74.01%. No, it's fine. Now, after that, he got on 2011, he got a return of 79.18. And then you can see that now in 2012, he got it to 169. And can you see that it's just compound? I'm talking about compound income. You need to just have a compound. If you don't have a compound, there's no point. You're gonna waste your money, you're gonna stay there, you're gonna stay on the rat race. If that's the rat race you want to stay, you need a little bit of pocket money. I can understand that you do that. But don't be surprised if that's the only thing that you have. Now, inside this course, they will teach you about different type of strategies. You will have the power train, you will have the bounce, you will have the reversal strategy. So all these strategies are already over there. I cannot just talk about them, but I'll be able to just show you a bit about the charts and stuff like that and make you understand exactly what is trading. If you want to know more about it, you know what to do, guys. So this is the thing, and some of the people just keep on asking that if that is a scam. I'm like, guys, I'm gonna show you some. You're gonna be quite amazed. This is the IP wall. And the IP wall, as you can see, these are all people who just kind of keep on posting everything about how great this thing is. I'm like, just check it out. Check it out. The IP student wall. Just it's not only one person. There's loads of people posting their strategy, posting the IP bowl. Can you see that guy? Just like look at how happy he is, man. I love his smile. I really do. I will ask his name later on. Yeah, just you got everything, and there's a big community. It's not only just in London, in Paris, in New York, in Atlanta, in the US, everywhere. In Australia, even they're big over there because the headquarters is in Australia. So they're everywhere, guys. So if you're just talking about you want to see exactly how trusted it is, it's definitely trusted. Oh, that's mine, by the way. I did it. I love it. That's mine. Yeah, it's made with wood. I was just at that time I went to Crete. That was pretty good. So let's get back to what we call trading. So we have what we have now. It's the psychological part, and this is the most important part that you need to understand. One of the most important part that you need to understand about trading. If your mental is weak, then you're set for failure. I gotta tell you the truth. Don't have a good mentor, you're set for failure. I'm sorry, guys, that's gonna be straight there, and you ain't gonna realize exactly what happened to your trading account in less than 2 days. I'll explain to you why. Because most of the people simply don't have what it takes to conquer their own emotions. I'm like, guys, it is your brain. It is you. Step up and just say no. Don't lie to yourself. Like I had one of my students, I just asked him exactly, what did you take yesterday? How many trades did you take? And he kept on asking me, telling me, no, I took 1, 2 trades, but you know what? The trading journal didn't lie. I saw over trading, I saw some no respect of trading plan and strategy and stuff like that. I was just laughing because I knew he was learning. I was just laughing, but telling him that, you know what? You just like in just 1 month, you lost 50K of a trading account. 50K gone. Just realize what you're doing. But now this guy is doing good with his own money. It's not like I'm not talking about the same 50K, but he's doing very good with his own money. He's thanking me, but I keep on telling you, this is not me. It's because you're being able to understand what you were looking for, the guy which is deep inside you, what you're really looking for, what you're just wishing to have. You have to be ready for that guy. Like, when we just go into the biggest, like right now, we're talking about consistency. A lot of people keep on asking me about how do I make money? I want money. I just like kind of want the short-term intensity of money. I want to make it right away. It's just a need. I'm like, you better have the long-term consistency than the short-term intensity. Because the short-term intensity, what happened with it? It's like you go high with it. You got right now a 20,000 inside your pocket. You're just so happy. You're like, I made it. And then the next 2 hours, or probably the next day, you just lose 40,000, just like that. We can see that your losses are bigger than what you win, than your winners. And what's the point? What are you doing? You're just doing 2 steps forward and 4 steps backward. 2 steps forward, 4 steps backward. You're not evolving. What you're doing, you're just staying backward. You want to be able to evolve in trading. Trading Trading is an art. Let's take the simple like the thing. You're going to just like chat with a girl or a boy or a man. I don't know. You just try to just like kind of chat with somebody. Is it because that person told you no? That's mean that you in a nightclub you're not going to just like kind of approach another person again? No, you're going to do it. But you're doing that with the law, with the respect of how the whole environment is. So respect trading, and trading will respect you. If you don't respect trading, trading is gonna make sure that you're gonna cry every single night. And that's gonna be sad because you've been working hard for that. So as you can see here, consistency, even the big guys, Warren Buffett, when he started, his average annual return is just only 24%, 0.6. Okay, you're gonna tell me that this is low, but let's be honest, when you just put your money in a bank right now, you're having on a saving account, you're hoping to have something, you just block that saving account, you're like, okay, per annum I'm gonna receive something. The bank only gives you 2%, maximum 3. And for big companies, they give 10. That's really rare, by the way. You need to be a good friend with your banker. And you got somebody which is able to just return 24% per annum. So let's take that little example over here. Look at that. You got 10,000 plus 25%. Oh, we rounded it to 25. I would say 10,000 plus 25% equal to 12,500. After 5 years, it becomes 30,517. Guys, I'm not saying that that's the only thing you're going to make. But if you're a swing trader, you probably won't just have that big amount every single day, just like to make those, what you see on Instagram and you see on Facebook. So they're all just showing you the end product. It's so funny. It's so amazing to show you the end product, but I'm never going to tell you exactly what's the struggle I had behind that. I'm like, you need to just kind of focus and pay attention. Just see exactly where you're going, what you want, how do you want to achieve it. You have to have that little picture about how much do you expect about trading per month, per year. Once you know that, you'll be able to achieve something. Now, we just see that you don't need to have also what we call a huge deposit at the beginning in order to become a good trader later on. People keep on asking me, but that's mean I need to have a lot more money in order to be able to trade and to do something. I say, no. When I started in my career, that was really funny because I just kind of went to an investor with a demo journal. The journal is what you really need. We emphasize a lot about having a journal because when you take your trades and the investor, just like look at your charts, look at your journal, and he sees the entry, the exit, why did you take it, the picture, the date and time, the stamp is there. Man, there's no way he's gonna tell you no. Especially if you can return, if you can just bring him a return of more than 10% than the bank is giving to him, man, you're good. I'm returning more than 10% per month. So guess what? I'm just doing that guy. I'm just taking out money. I finished to just have what he asked me for the year. I return it, blocking an account and everything. So the remaining of the year, it's my money. Simple as it is. I didn't start because my dad was rich or anybody was rich. No, no, no. You go step by step, get the knowledge, and then move on with what is happening. So we talk about psychological part because it's very important. You know, trading can mess around with your brain. That's the funny part I just love about trading. It's like people are like, you know, I just like trading is for gamblers. It is not for gamblers, but there's a lot of gamblers in trading. And they do gamble because first of all they don't have any journals. Second of all, they think about luck. Trading doesn't know luck. Trading doesn't play with luck. Trading doesn't have luck in its destination. No, you play with luck is gonna take all your money and just tell you bye bye later on. It's like having a girlfriend who just like kind of, instead of being a liability for you, instead of being an asset for you, she's a liability. That's what trading is, because you're competing against another guy. It's somebody else at the other side. You're trying to buy and that person is trying to sell. So that means if you win, this guy is losing his money. And if you lose, this guy is winning. So you have to be smarter. You have to understand exactly what you're doing in trading. If you just only think about, I want to make money, you don't think about how to preserve my money, what's going to end up is you losing everything. And being part of the 90% of people who just kind of keep on complaining that trading doesn't work for them. It works for everybody. You don't need to be a genius. You need to respect a strategic plan to get there. So when we talk about the psychological part of trading, it's like we talk about you have what we call the snake bite effect. You got also the loss aversion, and you got the house money effect. I'll give you a little example about that because even it happened to me. It happened to everybody, all the beginners, everybody. Just we all do that because it's inside, it's mentally, it's inside. Trading is 80% psychology and 20% technical. Technical, I can teach you that in less than a day. You know the different jargons. I just teach you the technical. I'll just like emphasize on the technical. You'll be up and running. But I'll let you just try the the psychological part. Trading will make you feel like you're stupid or you're not. I'm not joking. Trading will make you feel you're stupid, you're dumb, or you're not. It's just a kind of, it will put you down if you don't have a strong mind. Let's take that little example about that guy going to a casino with his wife. They just love going to a casino. That's what they do normally during throughout every holidays. They just have per year. So this time they went there, they spent all the money. Now they just realized they didn't win anything. They were going back upstairs to sleep because the next day they had to go back to their own city, their hometown. So while the wife went in the bathroom, the guy saw a little chip of 100 so he could go and bet again, win some more. So he told his wife, "Oh, darling, I'm going down because I want to be able to play again. I saw that chip on the table." She's like, "Okay, yeah, you can go." So that guy he went down. He started playing in the casino. He won. From 100, he went to, I would say, 100K, 100,000. Just like he went until he bankrupt the table. He bankrupt the table. He had 1 million in his pocket. Now the casino told him that we have to close the table because you just took too much. Better go to another casino. Instead of stopping here, he decided to go to another casino because he was like, "This is my luck. It's gonna happen. It is luck." So he went to the other casino and there he again bet. He won. He came to 2 million, 3 million. Instead of stopping, he said, "I want all in," like he used to do. He was going all in and all in and all in. Now he lost everything. So his wife was a bit worried. She was worried. She was like, he's been out there for quite a long time now. I want to know exactly what is he doing." So he went back home. He went back to the hotel at around 3 or 4. And his wife was like, "How was downstairs? What happened? Why did you just like, I don't take that much time?" He's like, "Oh no, don't worry. It's because I just lost £100, $100." I'm like, can you realize what happened here? It's like he lost 5 million, but because in his mind, it wasn't his money. It was still again the bank money or just the casino's money. So if for that he just only lost £100, $100, just the $100. That's what he had in his mind. It's like, that's what I lost. That's it. We call that the house money effect. That means you don't take the profit that you win in trading as your profit. You think that it's still again a trading profit. No. As long as you just like, as soon as you close the trade, everything which comes back, it's your money. It's not anybody else's money. It's not the broker's money. It's your money. So how do you preserve that money? How do you play along with it? Not just like gamble and just start crying again. That's the thing people don't really understand. People see pips after pips, that little bar going green, red, and like, okay, that's money everywhere. No. Now you got another issue that's what we call now the snake bite effect. Now that little thing is like somebody lost so much, he lost so much, then he doesn't even want to take a trade or he reduced his position sizing. Instead of going again like he used to have 100 because he could afford those 100, now he's going 25 because he's like, I don't want to lose again. I don't want to lose again. But now he start winning, and he's like, okay, I'll go back again with big amount like before 100, and then he lose again. And it's like, okay, I'm staying at the 25 because I'm tired. I just keep on losing. That we call it a snake bite effect, because that's mean a snake bite you. It just a kind of it got you over there. You're so scared. You're frightened. You don't even want to evolve. That's the second one. Now the third one is like what we call loss aversion. All that a lot of traders are doing that, and I did it. I'll tell you the truth, I did it. It's like you have a trade, you put that trade is going on positive, but you're so scared. You're like, it might turn against me, so I better cut it ready right now. Cut it early, cut it early. So you just like gonna block that profit to probably just like 10, and you're like, okay, I cut it, so it's not going anywhere, and you're so scared. But now, when you just kind of look back, when it goes down against you, you just let that profit go. You're like, okay, let it fly, it's fine. I just admit it. It's small. It's okay. It's gonna bounce back. It's gonna bounce back, and it never bounce back until you just accept the loss. So you let your losses running, but you cut short your profit, and that's a bad thing. But a lot of people are doing it. So these are the different important rules about trading. Don't trade what you think, just trade what you just see. I give that example to all my students because it is very important. You have Beyonce and Jay-Z standing in front of a car. Will you tell me that this is Beyonce and Jay-Z's car, forgetting that they might have they might have rented the car or anything? Will you just tell me that this is Jay-Z and Beyonce's car? I don't think so. Because they might just pass around, they might just cross the road, they might do something. Now that's not short. But now you got Jay-Z and Beyonce opening a car. Forget about if they rent it or not. If I ask you, is that their car? You would definitely tell me yes, because you can see that they're opening a car. It's probably, yeah, you tell it's Jay-Z and Beyonce, they're too honey, they're opening a car. It's their car. So just trade with what you see, not what you think. It's not because you see a superstar in front of his nice car, that's mean that's his car. No. It's not like that. Life doesn't work that way. So now you got those little example. You can see that over here. They have some nice example over there that you can just read around, have a little look, and enjoy it. Now we're gonna talk about the different type of price actions and stuff that people, those jargons that people use a lot. We talk about just like what's a trend, what's a run, what's a pullback, what is all those things. People are getting confused. What is all those things, man? Just like, I want to know what's a pullback, what's a trend. Let's take that little example of Usain Bolt. He's ready for the 400 meters. You got one of his teammates in front after the 100, another one after the 100, right? When he just like kind of get the signal, he just start running. That's a run. It's going up the hill, I would say that, or it's just going towards his teammate. Now, when he just pass over the javelin, the guy will start running. But what happened to Usain Bolt? Usain Bolt will start resting. But does it mean that the race is over? No, it doesn't. The race carries on. When Usain Bolt starts resting, we call that a pullback. Because that means he's just chilling now. He needs to take his breath. Because there's more to come again. And then his teammate just like runs again. So that's the second run. Then he passes the javelin, start racing. The other one takes again until they finish the race. The assembly of all these is called a trend. So run and pull back, run and pull back, run and pull back, run and pull back. That's the whole trend. Now, if you take the remaining, just like you take them separately, you will have that's a run, that's a pullback, that's a run, that's a pullback. And I can show you that over here. Let me just grab that little thing. that is your run over here. That is your pullback over here. That is your other run over here. That is your pullback, and that is your other run. You can even take it from here. Run, pullback, run, pullback, run, pullback, run. Okay, I'm not Picasso. I know that I should have just kind of start having some drawing classes. Didn't work. But yeah, this is the whole definition about run and pullback. We always say trade with a trend, and that's the whole thing. This whole thing is called a trend. It's called a trend because it got runs and pullback, runs and pullback, runs and pullback and runs. It always gets that. You know, trading is always going that way. Run, pullback, run, pullback, run, pullback until it goes to a certain point, and then you just kind of get a little bubble and says, okay, I'm gonna consolidate. So it just consolidate. It makes a pattern. It can be either a rectangle, we call that either channel, a rectangle, or consolidation pattern. And then again, it start trending. So it trend 20% of the time, 80% of the time is just that kind of consolidating. You know, the funny part is about the rules of 2080 is applied everywhere. Whether in psychology, whether in trading, trend, technical stuff, it's applied everywhere. You just need to see that by yourself. You can even try it. So this is the little definition about run and pull back. Now, this one is normally called uptrend. Over here, what you can see, it's an uptrend. I'll just bear with me a second. I'll just remove that marker. Yeah. So this one is an uptrend. If it was going down, it would be a downtrend. Let me show you that over here. Over here, you got what we call an uptrend. So I just take the marker. From here to over here, this is an uptrend. Here, even though you cannot see, but I can see here, this is a nice consolidation. That's where the market starts resting. And from here, when it breaks this one, this is the downtrend. This is the downtrend over here. And this is the other consolidation. So that means the market is resting. I know it's a bit messy, but this is how I can just try to make you understand. If we go on a lower time frame, probably from there, we'll have more as example. Just bear with me a second. Yeah, lower time frame. Let's go on a daily. That you can see over here, this part is your uptrend. All these over here that you're going to see over here on a bigger time frame, it's a consolidation. Now, if we have to just take them on a smaller time frame, you will see that these parts are basically part of a downtrend or an uptrend, because within the trend, there's another trend, and there's another trend, and there's another trend. It's always going into a loop. And depending upon which time frame you're trading, everything changes. As a swing trader, you will only just make your analysis on a bigger time frame and trade on a daily. As a day trader, you make your analysis on a daily to bigger time frame and take all your trades in the 1 hour or 15 minutes. And if you're a scalper, you go to the 5 minutes and more and more and more. There are different type of traders. You just it depends about what you want to be, which type of trader do you want to be. And I really suggest you to just start with the swing trader, because you need to just understand where you're going first. Then after that, everything flows. So now let's delete all these. And then go to that lesson. So when we talk about trade, people keep on talking about a lot about what if I have just a kind of a good strategy and I have a bad trade. I'm like, I just my trade is negative. I'm like, a good strategy, whether positive or negative, is a good trade. A bad strategy, whether positive or negative, is a bad trade. Because that bad strategy can kill your trading account one day. And when we talk about killing, we talk about really smashing it down. You're definitely gonna regret it. It's gonna be bad. You don't wanna be there. You really wanna be able to evolve. You're just trading to just grow, to become wealthy, to have more. You don't trade to just lose everything. As you can see, losing trade, good trade, bad trade, depending about the strategy. If you just follow your strategy to the letter and the flawlessly, it's a good trade. If you don't, you disagree, yeah, you disregard your strategy, it's a bad trade. And be honest to yourself, really. When we're asking you exactly, how many trade did you take? Just be honest to yourself. I took that much trade, that wasn't good. I didn't respect my strategy. Just learn. You need to learn from that. You don't need to hide it. There's no punishment. There's your money on the line. Just learn from it. I really wish you all to succeed, not to fail. You need to understand that. It's a great value. It's not only just thinking about, oh yeah, I want to make money. No. Money is definitely a tool. Money is gonna come when you just know how to be consistent. Otherwise, money is gonna be just a fluctuation, and you're gonna cry. You're gonna stay on the on the rat race. You're gonna be on the 9 to 5. You're gonna just I don't blame a 9 to 5 because of a 9 to 5 we're able to do a lot of things, but you're gonna stay there, stick there, and it's not gonna go anywhere. Now, you need to fear greed. Don't be too greedy. Your trade is going good, everything is perfect. You don't need to try to want more. You respect what you just say. As long as you go bulletproof. Bulletproof for us, that's our aim. Why we go bulletproof? Because we want to be able to have no losses. To have no losses at all. So you go bulletproof, that means you go neutral. That means if your trade is not going well, you don't lose anything, you don't win anything. But if your trade is going well, you win something and you win something. But to go bulletproof, there is also strategy. We call that risk management. There's steps to follow. You don't go bulletproof because you just want to go bulletproof. No, it doesn't work that way. You start talking about bulletproof when we talk about the trade going to 1 to 2 or 1 to 3 or 1 to 2 to 1, 2 to 3 or 2 to something. 2 is just the reward. 1 is the risk. That means 2%. You risk 1% to get 2%. You risk 1% to get 4%. We always risk 1%. We never go above that. It's 1% until the end, and that we'll talk about that later. So, as I say, a trade we always have some drawdown. As I told you, your hit rate will probably be a 70% success and 30% failure. And this is normal. And some people, they don't understand that. So what they tend to do is when the trade is on drawdown, they start changing their strategy in order to adopt another strategy. By the time they change that strategy, they're going to another strategy which is not anymore it's not anymore profitable, because that strategy now is also in drawdown. So they keep on going from strategy to strategy to strategies, and they realize that they stay in a drawdown strategy where everything is bad. And they're like, okay, I'm never profitable in trading. No, it's a trend. Just trading, just a kind of a strategy will give you an edge and then start resting. Give you an edge and then start resting. It's so simple because you have to understand. It's like when I say training strategy, it's only going to work when it's a training market. It's not going to work in a consolidation market or in a resting market, as you can call it. So always in the trading market. So a strategy has a really defined, predefined objective and goal. So when a strategy stop working, you just chill until you realize that okay, we start working again, and then you go back up. Especially if your strategy has been back tested. Like the one I use, back tested, full bulletproof. Man, I've been doing that for long now. It's not because I like to just I want to be a big headed. No, I'm just like I don't like my strategy. It does work, and I really want to just like I'll teach you guys, but that's going to be a bit further on. So not having also the roller coaster. The roller coaster. I love that roller coaster. It's like I'll tell you exactly how people think. If you look at the screen right now, you see that everybody is optimistic. Everybody is optimist when they just like I don't have a trade. Now they become very enthusiastic when it just like the trade start going well. Now they just like kind of have too much of euphoria and then don't close the trade because they're greedy. They think it's gonna go up and up and up, and then everything changes. Denial, pessimist, panic, capitulation, and they close the trade. They're negative. Now they're like, okay, I'm gonna do that again. Take the same hope. I hope that is gonna go to positive, then relief, optimist, and then they go back and go back. When you just like kind of reach that level of being of euphoria and despair, that means you just your emotions are not correct. You need to be you need to be neutral. You don't have any emotion when you go trading. You're just kind of like a robot. When you just ask a robot to do something or your computer to do something, your computer doesn't say, oh, because today I'm not feeling well, I'm not doing it. Your computer does it. That's the same thing you should do with trading. Just be just a robot and everything goes fine. So guys, these are everything that I wanted to talk to you about that today. But let's take that little sentence before we just like close that little mentoring. It's like a perfect strategy does not exist. You have to know that it doesn't exist. The guy just tell you that okay, I have a strategy that works 100% of the time, and tell him that you're just lying to me. A is definitely lying to me. Whether it's an automated bot or anything, it's not going to work 100% of the time. I'm sorry. Otherwise, perfection will be in this world, which, as you can see, it doesn't exist. So I hope to see you soon again. We're gonna talk about other things. If you really want to have this resource, you need to just like log to my page. Just like go there. Why I'm saying log to my page and just like click and buy over there, because for the people who just buy with me, we'll have just half% discount, so 50%, sorry, discount on the future mentoring. So that means mentoring after the 1 month. And the people who just like kind of buy it outside, when they just like come back to me, I would just like charge them the whole 100%. This is how it works. So hope to see you soon, guys, and let's catch up, man.